Chris, good evening.
Good evening, Joseph. How you doing this evening?
Doing really good. I am done with my year exams, so definitely much better today.
Yep, and it's going to be a week before you wipe that smile off your face. Believe me, my friend.
Yeah, that's been a pretty good relief and been a pretty nice journey as well, especially going to 2024 New Year resolution. Now is just to focus on the growth.
Exactly.
Awesome. And appreciate you coming in today, of course, just before the holiday. I mean, it's another holiday. We came from one holiday, so it's pretty much the holiday season. But I appreciate you
Well,
coming in.
absolutely. Actually, Joseph, I have to thank you for doing this because I was telling my wife before I got on is that Joseph just took his last part of the EA exam. I'm hoping he doesn't fall asleep in the middle of this because he's going to crash from all the energy expended on it, being nervous and what have you. So, folks, if Joseph falls asleep, this is going to be your first blooper for 2024.
Yeah, I'm definitely getting ready. Just after this, I'm going out for bed. But
Awesome.
we're going to be talking about a very interesting topic. One of the very most asked questions by a lot of people is Section 179 and bonus depreciation, especially with all the regulations that's changing and the recent changes as well. A lot of buzz had been going through about these specific elements, and one of my very good friend in real estate investor, I believe his name is Bob, if I can remember correctly. Bob, if I butchered your name, forgive me. We'll fix it. But the one of the questions he asked is, what the heck is 179, and how can we leverage as business owners towards the end of the year?
Well, Section 179 is basically, just actually go back a little bit. When I started learning about taxes last century, um, learn about it in high school and in college. And one of the things that hit us with the tax is that people think it's this very stiff thing that happens. This is the way taxes are, but there's a lot that goes in here, and some the tax code is actually being used to influence behavior.
Absolutely.
And so what's happening with that is that they want to say, all right, we want people to buy things. All right, what do they buy? You want to buy cars, computers, jets, what have you, because that keeps the economy pumping. So you're going to give people a break on those, and that the 179 is the way to do that by saying, okay, if you buy these assets and this equipment, we're going to let you write them off in the year that you bought them and put them in place in your business. Now, the key to that is put in place in your business. You can't buy something and leave it out in the back lot and say, well, I bought it, but I'm not going to use it for another 5 years. Well, you're going to have to use it for the year in order to be able to write it off. So don't put it in storage, put it on the floor.
That's
So,
awesome.
yeah, go ahead.
And one of the very important thing you just brought up is business usage. For anything that you can take and play with depreciation, it needs to be available for business usage.
Yes. Make sure that you're using it, and it has to be something that you can use in your business. Um, I I had a question. I was talking to a cosmetology class high school, and one of the young ladies asked if she could get a dog and write that off. Well, it's not really business purpose. Yeah, it's cute, what have you, but it it has to be used in the business for production of income. So,
That's a very
yeah,
good point you just brought up. As a matter of fact, one of my great friends, Zia, he lives in the DMV area as well, and he does land development, big land development,
mm,
for about 20 years, 20, 24 years. And one of the things he asked is, hey, can I write off my dog, who is a support dog, for my emotional support, for my business activity, because I take it to my sites. And sometimes it also acts as a guard dog for me in the hoods.
well, that's a good question, but I think support dog would might file under the medical deductions for itemized deductions. And so we have a topic to discuss sometime in the future: itemized deduction, medical deductions, writing off that support animal.
Absolutely. And that's a great point you brought up, especially with the medical side. A lot of medical expenses are actually a business expense if you structure it properly.
Yep.
especially for self-employed medical plan for your children, if it is also covering your children, your spouse. And underneath that, maybe you just put in the dog as well, provided it does have you actual medical. I mean, of course, you just cannot say it gives medical support. It has to have medical authority given for it, like a doctor actually prescribing it.
Yes, yes, indeed. So yeah, make sure the doctor has it. When I was little, I had a Saint Bernard, who's about my size. I'm about 200 pounds, folks. So my dad was always trying to find a ways to write that off. If we thought about taking him as medical, maybe he might have been able to do it, but years spent trying to write off that dog never happened.
And that's a very interesting thing, of course. But if you have a dog walking business, having a dog might be a very ordinary and necessary business.
It might be, yes.
So
But
make sure
with
to understand.
depreciation, it's just making sure people, people always ask, well, what can I buy at year end to cut the tax bill? Well, if you have something that's going to produce income, because folks, that's why you're in business, is to produce income. Will this buy you income? Will this
Absolutely.
bring you?
Let me bring up a weird question. You just that whenever you
Sure.
said when you were producing income, I know animals that are kept for breeding are technically considered as a farm animal or
Yes.
capital asset, especially if you have horse, cattle for breeding. What if someone kept dogs for breeding?
That's a good point, and I've never looked into that. But the associated costs that go along with raising the dogs would be considered business expenses.
Absolutely.
And so Joseph and I have never looked at farms or what have you. So if it was on that exam you passed, good. But haven't run across too many farms here in the DMV.
That's awesome. I mean, to be honest, this is something that I have not come across myself. It's just a uh, whisper in my mind when you just brought up the dog scenario. And
Exactly.
as a matter of fact, one of my friends, Anthony, actually, he was asking if he can buy a gun for his protection if he's doing a flip in the hoods.
That could be considered ordinary and necessary if it's considered that. So keep the receipt for it, and potentially this is why you bought it. I think you might be able to do that.
Absolutely.
But know that the IRS is probably going to question that, and you're going to need to have some backup for why you did that.
Yeah.
Like we always said, the first five rules is backup, 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 backup. So
Absolutely. That's awesome. So coming back to our initial topic with 179 versus now, let's talk about the bonus now. A lot of people, even when I first started into the space, I also was mixing up the bonus and the 179. Also, Congress have been playing a lot with the bonus.
yes, and that's true, and I can understand how that's going to be um, mixing people up. It's it with the bonus depreciation, you're allowed to deduct a significant percentage of the cost of eligible assets near their purchased and placed in service. And they're not everything is going to qualify for the bonus. It applies to new property like machinery, equipment, and certain types of real property improvements. Now, here's the kicker here for 2023, you only can take 80% of that. And with
Absolutely.
that, it can be used with other types. You can do it in combination with Section 179, which we'll get to in a second, to reduce your taxable income for your business. However, it cannot put your business in a loss position. If you have, it'll get it down to zero, but any depreciation that is taken beyond that is going to be carried forward to the next year. And with 179, with that it allows you to deduct the full price of these qualifying assets, which basically machinery, equipment, vehicles, and computers that are used on trade or business, and certain improvements to non-residential property. There's a cap on how much you can take, and it's somewhere over $1 million. And a lot of the taxpayers that I deal with ask me that question all the time. They look, I'm going to spend $100,000 on assets. how much room do I have to write this off? And of course, the answer is you've got another 900,000. Don't go on a shopping spree because again, just buy stuff that's going to help you in your business, but you got plenty of room. And I can always hear the over the phone saying that they're not spending too much. So
Absolutely.
there's just a couple of things to keep in mind is that um, you do have a thresholds with both. You can't go crazy on it because again, if the IRS picks you and they say, well, why did you buy this stuff? It doesn't make any sense. Yeah, you can back it up, but that's just a little extreme for what you're doing. It's like you're a high school tutor and you bought a Maserati and want to write off the Maserati. Good luck getting that past the IRS.
Yeah, that's one of the biggest reason, as Chris always mentioned, is understand that underneath business reasoning for that. And one of the things, as Chris was mentioning, is 179 was designed for small business owners, small to medium size, because the limit that you can write off is 1.08 million for 2023. And it's probably they're looking at adjustments. But the issue there is if you have more asset purchases more than certain amount, 3 points and some change, you cannot actually take 179 deductions. Beyond 2 and some change of millions, it starts to reduce how much you can actually write off.
Yep.
And stating that, one of my friends was thinking of buying a private jet. Now, of course, private jet can be a significantly interesting thing. It sounds awesome, but if you have a trucking company and if you're buying a private jet, that doesn't always go through.
Yeah, exactly. Why not lease the time? The woman who started Spanx, her husband started a jet company leasing leasing time on jets out. So maybe it makes more sense, and you'd be able to still be able to write off the trip for taking the private jet. So why have the jet? And you would also have to think about the upkeep of the jet as well, that your money's going to go to. Yes, you can write it off, but it's cash that's coming out.
Absolutely.
I mean, yeah, saving taxes is great, but you also need operating capital.
Absolutely. And as Chris was mentioning, 179 needs to be a business thing. Of course, with a lot of the big guys buying a private jet at the end of the year, making one trip from maybe DC to Los Angeles and saying that, hey, it was for a business purpose, 100% of it was business purpose. Yes, you can write it off in that case. The only issue that becomes is those people have a marketing company, unlike you maybe having a plumbing company. So plumbing company buying a jet for a business trip, unless you're being a big plumbing contractor, nationwide plumbing contractor, it becomes significantly difficult to justify that, as opposed to, like, say, for example, Grant Cardone. He bought a jet towards the end of the year to make a trip, and he's like, okay, made the trip, wrote it off. The only difference for him, he has 10X, which is a marketing and consulting company outside of his real estate company. So he can show that, hey, my marketing company, just for me to show it off, it was a business ordinary necessary expense. But make sure whenever you're making those decisions, understand what is there. But now again, it also becomes for people who have multiple trucking business, that's a very interesting business that's growing up now. Remember, the moment you go beyond 4 trucks, even though you can take Section 179, but you're going to be treated as fleet for those. But if you do, say, for example, a lot of the trucking automation stuff becomes like, hey, you're going to be buying from us. Then you claim 179 on the year you bought it. And then the person you're helping to automate the business for, which is a passive business, he's going to come and want to claim the 179 again. But the moment that transfer happens, you need to recapture those depreciation as well. So just remember that even though it sounds awesome, if your plan is to just, hey, I'm going to buy it and sell it in the next year, make sure that you're going to be recapturing all of those again.
Exactly. That's why you sit down with Tusif and I and say, here's what I'm thinking about doing. And then ask the question. And we don't mind if you give us a call and say, "Hey, I'm thinking about doing this. Can we bounce it off?" That's where Tusif and I have the fun. I mean, yes, we're happy to fill out your tax returns, what have you, but it's in getting in the okay. How can we make this happen? That is why we became accountants.
Absolutely. That's awesome. Now let's come to the point of bonus. What is the difference between bonus? Because when I hear to the YouTube channels, both of them saying, hey, you can write up the entire thing.
Well, yeah, but now what happens with bonus is that it's kind of you take the 179 first, and then you can take bonus to get you down so that you're able to write off the entire amount of the asset, because you're only going to have certain limits to 179, and you want to take the one that provides the biggest bang for your buck. So it's really they both allow your business to accelerate deductions and provide a tax benefit when you purchased it. But the bonus depreciation is applied to a broader range of assets, but unfortunately it's temporary in nature. Like in 2022 you can take 100%, in 2023 it's 80, and I believe next year is going to be 60. So they're ratcheting it down, I mean, depending on what happens. So you want to make sure that you can get the full, take the 179, because it's going to be one for probably more of the assets you're going to be taking, and then the bonus for carrying everything else that could be taken that was not included as 179.
Awesome. And folks, whoever can vote, reach out to your Congress people. Hey, stop playing with this bonus and keep it at zero, at 100. Because as a matter of fact, one of the biggest things that reason I feel like there was such a buzzword, big businesses cannot take 179. Like
Yep.
Amazon, they buy tens of millions of assets in the same year. So they cannot ever claim 179, but they could take bonus.
Yep.
But since it was 100%, previously it was 50% only. Now, since it's 100%, a lot of people was really happy because these big corporations were able to actually leverage those as well. Now they should.
Yeah, no, I was going to say, and I've kind of wondered, we were talking about the economy right now. It's December 30th of 2023, and you keep hearing about the slow economy. I'm wondering if the reduction in the bonus has affected the gross domestic product. I mean, something for us to noodle on the future. We'll bring on economists and have them talk about how that affects. This should be a fun conversation.
Absolutely. I'm planning on bringing on a politician as well.
Okay, wonderful.
So maybe we can have a conversation for a lot of people, especially if you know someone who's going to be open to talking to us, make sure to connect us as well. But an interesting thing also is 179 is only for the most of the machinery associated products, as opposed to bonus, as Chris mentioned, it has a much wider range of assets. Now, you cannot take any of those for assets that has more than 20 years of life, but especially on the real estate industry, anything that's below 20 years, which is in most cases, anything other than the structure, is typically less than 20 years, like air handlers are 20 years, sometimes 15 years, plumbing system, typically 10 to 15 years, in some cases even roofs, plumbing systems, electrical systems. It may even be, that's why one of the interesting thing and a very buzzword was cost segregation. You come in, you do the cost seg, you take everything inside, put the bonus, and accelerate the entire bonus situation for you. And one thing to keep in mind now is the fact that bonus is going away. This might be this and the next year might be the most efficient years, unless you're a big multifamily owner, for small investors to actually leverage it. So make sure to sit down with a cost segregation guy. We still have at least more than 24 hours before the end of the year. But definitely look into that as well. So, of course, today, unfortunately, my technology betrayed me. For some reason, I was trying to put that as a comparison between the 179 and a bonus. But for some reason, it wasn't pulling up. But hey, this is what happens. Technical difficulties does happen, but I hope I was able to paint a little bit of broader picture and clearer picture for the entire concept of 179 versus bonus. And I really appreciate, Chris, you're actually hopping on and giving your wisdom as well.
Glad to do it too. So these sessions are always fun, and always love helping out small business owners to understand what's going on. So folks, you got questions, leave them in the comments, and we can hopefully answer those in a future broadcast.
Absolutely. As a matter of fact, today's episode is from someone's suggestion as well. And if you have more topics for us to discuss, we'd love to do that in the future as well. Any last words before we let everyone go, Chris?
Well, no, just it's right now it's December 30th, 2023. So, and even if we have tax season coming up, but get in contact with your CPA and start gathering up your documents, because we're about to hit the season. So it's a happy new year to everyone, and may it be a prosperous one for everyone.
Thank you very much, Chris. With that, we will see everyone in the next one. Have a good one.